Welcome to this week's Rapid Recap, and today we'll talk about how the stock market plays tricks on you. It is July 9th, 2015, and I'm Sasha Evdakov. Now, today I won't talk about every single trick that the market plays on you, but we'll get into some basic psychology and how things work in terms of the mental tricks that get played on you when you're trading, when you're looking at the market, when you're looking at the charts. So I will touch base on that with just one or two, a couple different stocks that we'll look at. We're not going to do a ton of picks today. We'll just talk about conceptual things and where the market is. So with that in mind, I do want to let you know that next week, Tuesday, we will have the launch of that computer course, which is multiple hours. It'll be absolutely free about selecting the right computer parts for your trading workstation. And the only reason we didn't put it on this week was because we had already a video in the queue scheduled to be launched and released automatically. All that stuff really, it gets released automatically. I upload it, I do it, and it's once it's on there, I don't really look at it that much more, except with a few comments. If somebody leaves a comment, then I really appreciate the comments, and I'll write back to the comments. But I don't really check the videos anymore or anything like that. And my assistant handles all the other things that go along with posting it on the website and so on. So next week, that one is scheduled, so that'll be launched, and that is basically like a free course, multiple hours about selecting the right stock market computer, some of the parts I use, and all that good stuff. So we'll release that absolutely free for the newsletter members, and if you're not on it, you can get on the newsletter, when the time comes, if you're not on it already. Also, the book actually is out and available. So the book that I'm talking about is this one right here, the 245 money-making stock chart setups profiting from short trading. Now, I did have this earlier book, 245 money-making stock chart setups profiting from swing trading. All the positions in this book or the charts were to the upside. And, some people were wondering, well, there weren't any charts for swing trading to the downside. And that's actually because I've planned ahead. I knew that I wanted to release a couple of books in a series. So we did this one for profiting for swing trading to the upside because, again, you'll make more money usually going to the upside than the downside. A stock can run much higher to the upside than it can to the downside. But if you only know one way to trade, then you still will have limits to your trading. So that's why I planned for this release for this 245 money-making stock chart setups profiting from shorting. So this book is actually active on my panel for the books, and I hit the button to launch it. The only thing is it takes a couple days for Amazon to release it. So once this is public, I'm going to have that Get It Now button right here under this book as well. We'll probably move it all the way to the top as well. But what I'll do is I'll send you a newsletter when it's out because I know a lot of people were looking for it. It is not in color. It's black and white, but you can still see the charts just fine. And we didn't make a Kindle edition at this point because from the last version and from what people have been telling me, those Kindle versions for charting related things are just very difficult to read. And for a color book, it costs on the printing about $25 to $35 depending on the pages. And this is 265, 68 pages. So it would be very expensive for that book. So some people, they said, well, I'd prefer just having the knowledge rather than, doubling the cost of the book. So this book, I'll let you know when it's out on Amazon. You can keep an eye on it if you want, and it should be on there very soon. But we will send it out to you in an email once it is available on Amazon with the link. So keep your eye out for that email. All right, final thing that I want to mention is if you're on the blog And if you're looking at some of the things, I did update the project. So this project is complete in my mind for the shorting. The book is done. The next thing I have is the penny stocks book and then the huge option mastery course. After that, we'll probably go to the final course that I have on my list. So I don't know if there will be much more training courses after that one. So this one is going to be how I pick a stock, enter the stock, and manage that trade, and exit the trade. And that'll be in 2016 because we have a few other projects ahead of that. But, we may have other courses beyond that. But right now, that's what I had planned initially when I started this whole website. I decided to go really in depth on a few main subjects, so that'll probably be one of the last courses, and then we'll take a large break from the educational material. So I'll still continue doing the recaps, of course, the charts and everything else. But as far as courses, there's a wealth of knowledge out there already from what I've created. Okay, so let's get into some of the charts. And if you were following me on the critical charts, by the way, what you can do to subscribe to this is go to the Twitter, and you'll get notified automatically for all these posts. So just go to the Twitter Traders Fly, and you'll get notified when these are released. But I did talk about Apple here on when it was $122.57 that watch this shorting opportunity. Bearish volume was rising. And if you take a look at it right now, it's at 120. So you had a nice $2 gain. 1,000 shares would have netted you, $2,000. So with $2 run, 1,000 shares, $2,000. So something to keep your eye on is to watch those charts, because I did release them early this morning, and the lines apply for a while. So today, what I want to do is talk about the overall market, how it's doing, and just some of the stocks, because it's important to understand that even if the charts are posted a week ago, that doesn't mean the chart does not apply. It doesn't mean you need the most recent charts. And some people have that mistake, that thinking that they need the most recent charts, and that's not the case. What you need to do is really more understand the chart. You need to understand why that chart is in there. And you can look at a chart many different ways. You can look at it, one way. Another person may look at it a different way. But the end result is still the same, because I can look at this stock a couple different ways. But the end result, if the end result is still the same, turning it upside down, looking at it sideways, drawing different trend lines, you'll get the same kinds of profits, because people look at things differently. What's important is that money management. What's important is spotting those opportunities. And if you don't have that trading plan, if you don't have the risk management, money management for your trades, then it's going to whip you around. And this is what happens with stocks. And we'll mention a couple different things. Let's just talk about the Dow Jones. Normally, the S&P is good to look at, and the composite. The composite typically leads the market. But let's talk about, let's start here. Let's start at the composite. We'll just start drawing the first trend line right here, okay? And notice how this trend line really hits a couple of different points. So we have the supporting points here. So this creates this support line. Even this one, it doesn't touch it, but it comes close. So it still creates that support line. Okay, these right here also create a support line. Okay, so if we can agree to that, this stock, as we zoom in closer, let's just break this down bar by bar, how this plays tricks on you. This initial bar broke that long-lasting support line. And here was the volume bar initially, and here was the second volume bar follow-through, higher than the average volume. The average volume is the 20-day volume I have right here with the white line. So notice that this line right here is also bigger. So most other volume bars, are pretty level. Okay, so we had an increase in volume right here and a break right here. Okay, so this stock, what happened was it started to go back up. And this is when a lot of people on TV, on this and this, will start saying, oh, do we have a higher market? Oh, do we go higher from here? Can we see higher prices? Will we make new highs up here? And that's when you have to take a step back and look at that bigger picture. Now, when we're looking at here, this is a tighter picture. That's not a bigger picture. But the bigger picture is we've been trending lower from here. The little pop here came back to this trend line right there, retested it, and rejected it. Okay, so we rejected at this trend line. This is called an internal trend line resistance. You don't have to write it down. You just have to know that stocks come back to retest things. And if you continue to draw that line, you'll notice it rejected. So what happened? We went up for 2 days. Stock rejected it, continued to sell off further, continued to sell off more. So here, then we had a nice sell off here. Then we had a bounce right here. The stock went down, popped, and then again, we had a huge down day here. And now, today, we're in the green, but look at what happened in the day. So I want you to pay close attention at not just the bars, not just how the bars look, but how the day actually was working, how the day was actually moving. So what happened today? Let's just look at what happened today for now so you understand what I'm talking about. We opened here, okay? That was way higher, much higher than previous, okay? So that's why we're positive. It's a green bar. We closed higher. We closed higher in terms of the previous close. So we're still green. That's why we're green. But what happened to the stock? What happened to the price of the market of that composite? Okay, it sold off from the highs here to the lows. What happened throughout the day? We sold off. So the energy still continues lower. If we zoom in here on the daily, it's a lot easier to see. So what happened on the day? What really happened? Okay, well, we started at the highs up here. Okay, we popped higher and we continued lower. Just draw it to the closing. What was the trend? Pretty simple to spot, right? And you can draw other trend lines right here. You can see the resistance once, hit it twice, boom, you had opportunities there, right? Backing it up, looking at the daily, okay, you see that's what's happening in that stock. And if I draw it more on the 4 hour, which is not something I like to use, but what are the majority of the bars? If I go to the 2 hour, the majority of the bars, what are they? What color are they? Okay, majority of the hourly, now you start getting into seeing a little bit more variation. So then we'll back it up. Let's go to the 3 day or 4 day. What happened the last couple of bars? Well, we had a red bar, green bar, red bar. Okay, what happened the last week? The last week we had red bar, red bar, red bar. So what do you think the average for the week is going to be for the week? Now, I'm not talking about day trading. If you're day trading right here and you're trading to the upside for the pop, that's fine. Day traders will do that. That's what happens. But then what's the longer term picture? If you want to just sit and relax and let your stocks run, then you got to see the bigger picture. Look at the weekly. Here's the weekly. What's been happening the last 3 weeks? We've been red. Okay, now volume isn't huge. It's not picking up, but you can take this to the other indices. So same concept really is approaching. So we'll draw this line out. You can see, things do happen sometimes, similar to what happened right here. The stock or the trend line will break and then you get a little snap back like this and then they'll continue higher. These things do happen. So be prepared if we come back, sometime to this price level, we can have a snap back. But really, you got to think, okay, what's going to take this market higher? And you start looking at other potentials to getting to, this price level, let's say 198. Okay, well, this price level right here, looking at this level, if we're on the spiders, if we break this line right here, that's where we snap back. that level, if that breaks, you could easily see it at the 198 level. That's a very nice run to the short side. 5 points there. If you're doing the S&P, we're going from here. Okay, this is 10 times the spiders, so it's a 10x ETF. But here, the sell-off, let's just put it right there. Here, the sell-off going from here to here, we're looking at about 53 points. Okay, so can you get that? Yeah, absolutely. Absolutely. Why can't you? And if this market corrects, that just creates healthier trend lines, healthier chart patterns, allows you to have new opportunities. I mean, look at where we've been to where, even if we get back down to 1370, there would be nothing wrong with this market. That's just healthy pullback. If your car gets a flat tire, is there anything wrong with the car? No, it's healthy. It was time to replace it. That's normal. Okay, so things happen, and the same thing here. If you have a pullback to even this level right here, and then you can bounce, and there would be nothing wrong with the market. So always watch for the pullback, how it's coming into it, and what's it's doing. Would I like to see a correction? Yeah, absolutely. I would love it. I welcome it. And right now, looking at the daily, look at what happened to this stock, to this ETF, spiders. Popped a little bit higher, went up, sold off. Okay, let's take a look at the, let's say 5 minute. Okay, popped, sold off. Okay, open, popped, sold off. Okay, does that tell you that it's strong? No. So what happens when it plays tricks on us? So the trick that happens is that we get sucked into this. We get sucked into this part of the rally. We get sucked in by the news. We get sucked in by the noise. We get sucked in by other people tweeting. We get sucked in by other aspects of our own psychology that things are going higher. And we're not willing to step back and say, oh, that move's not real. You got to say, yeah, that move's not real. It's like someone trying to, sell you an iPhone, brand new computer for $20. That's not real. Something's not right there. So the same thing here. When you get good at spotting this, you get good at spotting these moves, you got to say, something's not right. That move's not real. And then you can say, okay, I'm going to step back for 2 days. And then I'm going to reshort. I'm going to wait till the price action comes back and boom. And then you reshort 22 points. Now we talked about Apple. Talked about Apple here on the critical charts. Here's Apple on my chart that I posted this morning at 8 o'clock or 7 o'clock, whenever, maybe 6:30, whatever time I was up. Then posted this one at 122.57. I was watching it like a hawk. Right here. This was my entry point right there. Break of there. Gave me $2 profit right away. Sold some shares. Boom. Could it come back to test those prices? Yeah, it could. It could. But imagine you got 3,000 shares right there. 3,000 shares. And the stock, where is it now? The stock. What did it do? 120. 3,000 shares, $2, $6,000. Right? So you can do the math. You can play with all the different calculators, whatever works for you. If you're doing 20 shares, doesn't matter. Where can this stock come back? It can come back to 105. It can come back to 105. It can come back to, this 119 level and bounce a little bit, and then chances are it'll sell off again. So you're watching these levels. It can come back to 95. And if things really accelerate, 100, you could really come back to 55. But if you draw these things out, you wait patiently, and I talked about this one a handful of times in the rapid recaps. Watch the previous rapid recaps. People believe in their stock. People believe in things in these conditions because they're trained, and we play into that. And that's bad for the market for your profitability. Because what happens is the earnings came out here, the stock sold off, but so many people got in here at this level because they love Apple. They love it like they love their children. They love the watch, they love the devices, they love the company, they just like the way it functions. I like trading the stock because of the liquidity. I like trading the stock because of the way it moves, the way it handles. I know it well. But stock came back again, rejected here. But just because I like trading the stock doesn't mean I'm long the stock all the time. Right here, I'm short. Right there, that's the level. You go short. We talked about this. We talked about this level. If you were quicker on it, you could go short right here. And in fact, right there was another shorting opportunity, and we took most of the profits over here at that level. Okay, just for risk management and so forth. But right now, you can get back into the short and allow it to run to a certain level. So, you're looking at these trades and you're seeing what's happening to the other companies. How is the overall market? What happened to MasterCard, another leader? Here's the Trendline. Trendline's been doing well. And then what happened? Well, we had a sign right here. Okay, this was the initial stock ready to break. We got people that sucked in to this because these stocks, they play games on you. They play games. But what happened over here? Okay, look at this level. How much volume we got? We got 3.2 million. We got 4.4 million. But here to the upside, we got, 4.8 million. But then 3.7 million. Ran out of steam. Okay, 4.8, 3.7 versus 4.4 versus 3.2. Okay, stock started running out of steam. And then what do we have? We got 3 million shares to the down, 3 million to the up. Then what? 5 million, 4.9 million down, 4.4 million down, and then 3 million up. Okay, 5 million down, 3 million up. 4.4 million down, 3 million up. Who's going to win, right? And today, same thing happened. Stock came up to this trend line, rejected it, and sold off. Okay, that's what happened. Same thing with, let's just take a look at AET. We talked about this one in the critical charts as well last week. Here's the trend line, stock breaking, boom. Okay, continues. Okay, tried to pop. So what game was it playing with you? Okay, look at this game. It popped. It was green, and that's when people get scared. They get nervous because they don't know and understand how stocks move. But they got nervous right there on this green bar today. They probably exited their short if they were in short. But what happened after that first 15, 20 minutes? Stock continued to sell off. Okay, so look at it. Look at this right here. Stock gapped up. Let's zoom in. Stock gapped up. Okay, went past that line, and there was a lot of people, I bet you, a lot of people that got stopped out right here because they were tight on their stop, but they didn't know how the stock moved. Okay, and then stock rejected those prices and continued to do the natural thing for that stock. Okay, natural thing for that stock. And the natural thing, looking at the daily, boom, red, down, huge bearish volume. It was there. Okay, if we take a look at the 2-day, what are the last few bars? If you take a look at the 3-day, what are the last few bars? If you take a look at the 4-day, what's happening? Let's look at the 5-day, weekly. Here we go. Still, what was the bar? What does the bar tell you on a 5-day average? That's a 5-day average. Think of average probabilities. What's the probability for this week, because we're looking at the weekly, that this stock is heading lower tomorrow? Okay, probability. Okay, so looking at the probability that ended up in the week, it's going to, chances are for the week, it'll end up probably red, just because we started that week off all the way over there. Okay, so these tricks, you can't get sucked into them. You got to watch them. Sohu. Same concept. What happened today? We had a pop. And it was due to probably a lot of this trading that got stopped the other day. I look at those things as just malfunctions. It's part of every industry. It's going to happen. I know we don't want it to happen with the financial industry because people hold dear to their money, their $1 bill, and they love it more than they love their pets, dogs for some people, But in reality, it's going to happen in every industry. No matter how many things they put in place, it may happen less. But just like hard drives fail, just like other things happen, it's really unfortunate, and it does happen. Even Twitter, releasing its earnings before the bell, slip up, really took the stock down. And, these things happen. Unfortunately, these things happen, and it's going to continue to happen. That's just natural. It's natural. It's human things, human behavior that if something can go wrong, it will go wrong. So always be mindful, be prepared. That's why I always say take profits into strength. So here, the trick, who played on you right here was, boom, this pop. But what happened in the day? Stock went higher, sold off, came back. It's still up $3, but for the day, what happened was it continued to sell lower. Can it come back higher a little bit and try and fill this gap? Yeah, of course it can, because we had a lot of shorts over here, a lot of shorts overhead. So that means all these people up above that have traded it short at this level can take some profits and get it back to this level. Okay, so always be mindful that there's other people that are ahead of you, and it can take the stock up higher. Just like with Apple, there's people that are still short at this level. I was one of them at this level, and, some got out here and some didn't. And, those people can start taking profits, and it would push the stock higher again. So in either case, I wanted to share with you some of these charts, and we'll get into Tesla as well. The same concept, same things happening. Stock is breaking, long-term trend line, boom, heavy volume coming in this week, and it's not even Friday, and we had some trading issues. Boom, volume starting to pick up. We could see some trouble, at least to the 225 level. Maybe it won't get that far, maybe 243, but we'll see. We'll see how things project. At the moment, I can say it broke this trend line, and that's not a good sign. Okay, so in either case, watch your stocks closely, see how they're behaving, how the market is behaving overall, and how it's moving, how it's breathing. And watch out for these mental tricks that happen right here that pop to suck you in. They suck you in to go long, and then they rip that rug, or they rip it right from under your nose. They just take it and pull it away. So be careful, be mindful what's happening on the bigger picture, and stick tight to your stops and take your profits. All right, I hope you found this video helpful. Thanks for joining me. I truly appreciate you. I truly appreciate you taking the time to spend with me in this video, because I know that time is precious. It's something that we can't get back. We can always make more money. We can always, buy more things, but we can't get back our time and our energy. So thank you for taking the time. Thank you for taking the energy to watch the videos. For me, it's important to connect with you. I enjoy the connection. Just today, we had a chat with someone on the phone about their trading, how things were going. I had some really lovely emails from people, over the last week as well, sending me in how they're doing, how they're progressing. One of them's going to the military. Another one is, a stay-at-home mom, homeschooling, I believe. So I had a lot of great emails coming in and sharing the progress that you guys are doing. And, the person you have to thank for that is you. You have to look in the mirror and just say, that's you doing it, because you have to take the action steps. I can only guide you. I can help you along the way. But a lot of people in this business, they fail not because they don't know what's happening, but because of the internal game, because not being able to move forward in the process. Because you can learn everything there is to know about a sport, but if you don't take the ball out, if you don't dribble, if you don't go skate, you may have read a lot of the knowledge and concepts of how to do it, but if you haven't done it yourself, if you haven't took the action steps, then it's very tough to move forward and proceed. So thank yourself as well. All right, so we'll have the book out. I'll send you an email about that once it's released. Like I said, it's on the button was submitted on Amazon on the Create Space system. So it just takes, I guess, 2 to 3 days for it to be on the website. But once it is on the website, I'll let you know if it's on there sooner. Sometimes it's on there sooner. And the computer video for the 3, 4, 5 hour training on trading workstations and multiple monitors and the things that I actually use for my trading setup, that'll be out next week on Tuesday. So that'll be the trading lesson. And the next broker we're reviewing is Trade King. So that'll also be up over the next month or so. So keep your eyes out for those things and just some of the things that I'm working on. Thanks again for joining me. And if you have questions, don't be shy to contact me or email me. All right, take care and have a great weekend.